Hello and welcome to the Bullish Money YouTube channel, and today we're going to talk about a pretty uncomfortable subject, which is when forecasts and analyses go wrong. And of course, as an analyst, I try not to be wrong, but it happens. It happens. I mean, there's no such thing as an absolute 100% perfect analysis or forecast, especially because the future is unknown. What I do to hedge against that unknown is to use probabilities, is to use statistics to give me an idea of what the risk is. So I only like to invest in stocks where the odds are in my favor. So something that is like, say, 70% in my favor, that's a risk I'm willing to take, because it's only a 30% chance that I'll end up losing money. And there's a lot more details and granularities beyond that, but on a very simple basis, again, I only like to invest in stocks where everything is more in my favor, where I have the house advantage. There are those times when things just go awry, and I will freely admit that Cameco, which is ticker symbol CCJ, I'm looking at the article that I wrote on this topic. I wrote an article on Investor Place Media saying that Cameco is something that investors should either consider selling, or if they are not as risk averse, to actually short the stock based on buying some put options. I came to that conclusion because of the statistical performance. So over the past 90 days, we saw an average performance of negative 3.16%. And that has almost always led to huge bearish momentum, just causing the market to roll over. So I looked at the probabilities, and I said, look, this thing is about to die. What I did not count on is the nuclear deal between Iran and the West. Once they came to an agreement, of course, the uranium sector, exploded in a good way. If you're bullish on uranium, and also CCJ started to skyrocket as well. So from the time of writing price till the time of this video, the market, CCJ, has increased actually over 9%. So if you were shorting the stock right now, things aren't looking good. However, in my defense, I did give a 90-day forecast. So I'm looking at more of a longer-term trend. I'm looking at about around July that we're going to see shares of CCJ trading hands below $14, possibly below $13. And I did not like the enormous wave of sentiment that was in the options market. There was a huge spike in volume for call options, which are, of course, bullish bets. They're biased trajectory bets that the underlying stock will move higher. I didn't like that sudden shift in sentiment. I thought that this looked pretty bad. And about the nuclear deal, I mean, we're talking about Iran here. I mean, since when do Western countries ever trust Iran, and when do Western countries ever trust anything that comes out of that regime? So I think that you also have to consider the Israel factor. I don't think Israel is just going to stand by and let this deal happen. Obviously, Prime Minister Netanyahu has been very vocally opposed to this deal. So I think that this deal is just a short-term market fluctuation. I think by July, of course I'm biased because I wrote the damn article, but I think by July, I think we're going to see a lot of that positive momentum that we've seen recently. I think it's going to start rolling over, starting to die down. Again, the statistics don't lie about the stock. This has been a really ugly company, a really ugly stock for a very long time. And the probabilities are just not in favor of the positive momentum building higher and higher. But for right now, this is not going the way that I had forecasted. It's not going the way that the probability report has forecasted. And I think what it showcases is that you just have to be aware of certain dark horse events that could really mess up the technical picture or mess up the fundamental picture, which then drives changes in the technical markets, in the stock market. So just be careful that even though you may have a stock, that you may be investing in a stock that is very probable that it will do well for you, there are times where something could just come in all of a sudden and just mess everything up. So always maintain risk management. That is the most important thing, to manage your money, manage your risk, know your capital inflows and outflows. Make sure that you're running a very tight ship yourself, just in case things go sour, because inevitably they will go sour.